Vibranium, kryptonite, cobalt, and lithium.
You get a tariff, and you get a tariff, and you get a tariff.
AI is beating physicians.
We all give it all of our information and teach it things and help it to learn and do about us. If it decides it wants to take all of that and rule the world, it probably could.
Are we in a mini tech bubble, or is it that the AI-driven gains are actually justified? I think it's a mix of both.
I think what they're doing is they're trying to establish the crypto realm as a currency realm.
God put Adam into the garden and put him to work.
Vibranium, kryptonite, cobalt, and lithium. We're going to be talking about the Minerals Initiative today, as well as the Big Beautiful Bill and new tariffs in today's War Room. I'm Carson Rich, joined by Eric Dunavant, Drew Brown, and Kristina Schuler. And guys, let's dive in.
Let's dive in.
Let's do it.
So
the real question is, who's seen Superman?
I have seen Superman, and I know you have too.
I have too. And that was good. It was good. If you haven't seen it, go see Superman. That's my advice. What's going on, Carson?
Well, we've got the energy sector dipping, but tech growing, tech expanding in Q2. Specifically, we saw in the energy sector, we had an 8.6% drop due to slowed demand, essentially. A point on that, I should say, is that the U.S. rig count has been, steadily decreasing for the last 11 weeks, just consecutive declining. We're minus 47 year over year. We're down to 537, the lowest since October 2021. So I think that's an interesting stat to look at. I know Absolutely. It's surprising to hear. But on the flip side, we had tech up 24%. And specifically, Kristina, I wanted to ask your opinion on the tech side of things. Specifically, I don't know if you've seen any of the price to earning ratios on the tech stocks versus the energy stocks, but there's quite a bit of variance there. And I wanted to see if you had anything on tech since I brought this up.
Yeah, absolutely. So I think the question kind of becomes, are we in a mini tech bubble, or is it that the AI-driven gains are actually justified, right? I think it's a mix of both, if you ask my opinion. I would say companies like NVIDIA, Microsoft, Amazon, they're all showing real growth, strong profits, strong demand, and they're making big investments into building their systems for those AI needs, like servers. They've done data centers and so forth. I think that part kind of helps explain some of why those stocks in particular are trading at maybe higher prices. But if we look at things like price to earnings, like you mentioned, those ratios give us perspective, right? I think, Microsoft, Amazon, from what I saw, they were in like the 30s. NVIDIA was around 55. Those are all high, but they could be justified from what I was just saying. Whereas you have Broadcom, I think they're right over 100. Tesla's above 180. Those are more, in my opinion, kind of big bets on future performance. That's where I think things are kind of getting a little bit overheated, if I had to guess. So I don't think we're in a full-blown bubble per se, but I think there's definitely hype out there. The opportunity for AI is definitely real. But I think the interesting part that we really have to be mindful of is stay focused on those companies that actually are delivering results, not just kind of riding that trend of AI.
Yeah, I don't know. I'm just going to tell you guys, something about this makes me nervous. That's it. I mean, it feels a lot like 98, 99. That's when I started in the industry. And for those who weren't around, that was right before a 3-year crash. And I'm not calling for a crash. I don't know that I'm calling for something that big, because we do see things that, like we were talking about, the PE ratios, as you said, for energy are very reasonable. But in the tech area, what you're looking at when you look at a price to earnings ratio, and what we have to think about is kind of from an investment perspective, when you look at price to earnings, is what am I paying for versus how much earnings I'm going to get in the future.
Right.
And what this just tells me, and I think we've kind of been thinking about overall in a bigger picture, is it's more they have to not, when you have something that's more expensive, they better be right. And it's almost pricing for perfection.
Yeah.
Versus when you got a lower PE ratio, you got some room to be wrong. And I think I'm worried about the perfection that they have to hit to maintain those price levels. Maybe that's the best way to say that.
Well, and I think the biggest question for us to watch in regard to that whole sector that's developing off of the AI focus is where does the real application, the real AI application in need, where does it actually land in regard to where all that money is going, all the investment money is going of these companies? And so, and because a lot of it, they're still developing out, testing things out, and some of that's not settled out yet in terms of end user and application. That some of it is, there's a lot of possibilities out there, but there's still a lot of the mob factor. AI is popular, so there's a lot of focus on it, right? Grok is popular because it's connected with Musk, so there's a lot of focus on the AI with Tesla and with Musk's companies. So we just have to factor that in. That's the grain of salt that kind of has to be thrown into that.
I would be interested. Did you see anything that said why are rig counts down? I mean, I know they're down. That's a data point.
It's just demand, believe it or not. And rig count meaning rigs that are looking for new wells, rigs that are looking for more oil, essentially expanding their production.
So that rig count is talking about new rigs, like
yes,
new rigs, or is it existing rigs, not existing? Rigs, not
new spots,
not pumping.
Essentially
new spots,
new oil.
Okay. So there's two things in that, and this is an interesting thing that in terms of what to watch. But one of the things that that has just come out is that there are several of the OPEC countries that are violating their
Saudi Arabia.
Yeah, well, they're not the only one though, but they're the newest one.
Yeah.
To violate their quota limits, their quota limits, and so they're producing more than they've promised within the agreements to produce. And that's an interesting thing because of this demand issue. I think another thing is all of the sanctions on oil that's going around, whether it's Russia, China, or Iran, or whoever's in the sanctions buckets, that it's causing a lot of people to be going around the system in order to get their oil, right? So I think that's affecting what's coming up as demand, which brings me to I just wonder, like in the development sector in the U.S., the energy development, how much we might need to start watching companies that are going in to existing or abandoned wells or whatever, and using already infrastructure. Sure. Basically, it's already there, and gleaning what's to be gleaned from there, because I just wonder how much that really is a play at this point, since they're not doing a lot of new drilling at right now.
Yeah.
Yeah, I think one thing, Kristina, too, that's interesting right here, if you compare both the pieces, though, that I'd love your thoughts on is, what this says, if you look at the expense of PE ratios that are happening with the tech companies versus kind of compared to energy, which is what you were bringing up, is it shows that you can have times where pockets of the market don't look good, but it doesn't mean there aren't investment opportunities.
No, I think absolutely. And that's something that we just, kind of to my point earlier, we really just have to pay attention to. There's definitely companies that are true and standing behind those PE ratios, right? That do make sense, why they're trading higher and potentially, but I think we have to look at it individually on a case by case basis. It's not something, across the board. I think in general, the market, yes, is overvalued, but there are definitely some companies that we can hone in on to be more intentional with what we're, buying into as investors.
Have you seen anything coming out, Carson, in terms of how close we're getting for any public or IPOs in the nuclear space?
No, the only thing I could comment on that is that a lot of already publicly traded companies, for one is on our notes here, Chevron, for instance, and there's a few other ones that are funding nuclear research and investing in our nuclear fusion and investing in it, and would capitalize off of it. So it would be sort of an indirect way of owning a company that's in that field, similar to owning NVIDIA because of ChatGPT or something like that.
Are there any reactors online yet that are?
they're
being tested functionally in the U.S.?
Definitely testing reactors. There aren't any that I know of that they're using regularly outside of testing and
Because
experimenting.
that'll change the energy landscape
Sure.
once that.
And let's be careful. We've talked about all these companies. None of these are a recommendation to buy or sell, and we're not talking about
Correct.
what we own and what we don't own. This is an observation of individual companies that happen to be in different spaces. If
That
you want
is
to have
correct.
a conversation about what we own, step over to our intentional ownership side of the business, where we have regulated and SEC conversations, which is not here.
Not here.
That's right. So, other than anything else for energy and tech?
No, I
before we
did. I
move
think
on?
we've beat the horse.
All right, sounds good. So I always like to look at, because one of the themes, I guess you could say, of our show here is we always talk, seemingly every episode, we always talk about manufacturing in the United States. So I always look at the ISM indexes, the manufacturing and the non-manufacturing. What you'll see regularly is that our non-manufacturing, which essentially is services,
Yep.
is steadily growing, which means in terms of an index value, that would be over, or it would be 50 or above. And then we've been struggling with the manufacturing index. We're sitting at 49 in June, which obviously that does not signal growth. That signals contraction, or at least not growth, either steady or contraction.
Anything below 50 is not growth.
Yeah. And so to take a little bit of a deeper dive, I wrote down a couple of the specific industries within these two indexes. And I wanted to give you two that were growing and two that were contracting for each. In the manufacturing index, and it's funny that we see this, and we just talked about energy being down, but I think this might be a Wall Street versus Main Street, I guess you could say, conversation. But petroleum and coal had an index value of above 50. So did computer and electronics, so things like semiconductors, laptops, iPhones, things of that nature. Chemical products below 50, and then fabricated metal products below 50. And that'd be like all your construction stuff, metal pipes, bolts, screws. And then in the non-manufacturing index, which again was growing, the entire index was growing. Repair and maintenance was above 50, trucking and shipping was above 50, agriculture was below 50, and construction was below 50.
So I think that's really significant that that agriculture is stalled and construction is stalled, basically. I mean, 50 is like right on the line between contraction and growth.
Correct.
It's very interesting that it sits right at, they both sit basically right at 50. And those are two of our how do I want to say this? We're trying to develop the manufacturing sector, right? Well, within the services sector, but agriculture and construction, those are the sweet spots. Those are supposed to be the sweet spots of the U.S., right? So that's it really interesting that those are struggling, and we've looked at the housing market, and we've looked at construction materials market, and all that before, and coming out of COVID, those didn't really recover,
Right.
and now you've got wonky stuff going on with the housing market still. But that's really interesting that those are still firmly in the struggling place.
Yeah. Anything, Eric?
Well, no, I'm just... No, not right this second. I'll come back in a minute. Sorry.
We'll move on.
I'm having
to,
technology problems, which are distracting me from what I really need to be thinking about, and so that's what's going on.
No worries. Well, one of the things that I was reading a lot about that got me excited because, and again, this isn't advice to do anything with your money. However, I'm very interested in the digital assets realm and cryptocurrencies and things like that. And this administration has been putting out a lot of policies in the digital assets world. And one of the new ones that was proposed on the 1st of July, the 3rd of July by Senator Loomis was this crypto tax bill, which includes a few things which are interesting. The first one is that it would be a $300 per transaction deduction. So and the way this would be used in the real world is, let's say you did use, we'll just say Bitcoin because it's what I thought of. Let's say you did use Bitcoin to buy a $10 cup of coffee, or you used Bitcoin to buy $150 concert tickets or whatever it is, normally you're technically selling the Bitcoin in order to purchase it, so you would pay capital gains tax. But what this bill is saying is that up to $300
per transaction.
Per transaction. And then in terms of capital gains tax, the yearly $5,000 would be a yearly deduction. So you pay over $5,000 of.
So if you had $10,000, you'd pay $5,000 in capital.
That's
gains.
correct.
Okay.
Yep. And then the last thing, which I thought was interesting about this bill, is that it would remove the wash sale rule for crypto.
So explain that for anybody listening.
One of you, Kristina or Eric, correct me if I'm wrong, but the way I understand what a wash sale is if you sell an asset and then you buy it again within 30 days, you cannot claim it as a loss.
That's correct.
For your taxes.
That's right. If you sell something you lose money on and you buy it, you got to give it 31 days before you buy the exact same asset back. Otherwise, you can't deduct it.
And so what this bill is saying is, no, you can buy it the same day, essentially, and you can get your write-off for the loss.
It's all interesting to me from this standpoint. I mean, what it helps is if digital assets are going to be a legitimate form of asset, which I think is what we've been looking for some direction. We've been looking for some definition, so we're getting that. The interesting thing on this is, these types of proposals are good for right now because they give some definition. I don't think it's sustainable. Meaning, I think at some point you have to bring the wash sale. If it's going to be a legitimate asset, then treat it like all other assets.
Yeah.
Like if there's wash sale rules here, then apply the wash sale rule there, right? And so I understand why they do it temporarily. But you are going to get some pushback over time. I think I've got more smaller issues than I've got micro issues than I do bigger. But
I wonder if it's sort of like an incentive for people to invest in digital.
That's what I was going to say. Does it entice people to buy into the digital asset space, which,
I think,
like you said, all the government is trying to kind of push toward that?
Yeah, I agree with that, but a little bit differently. I think what they're doing is they're trying to establish the crypto realm as a currency realm. So they're trying to back off of the investment asset part of it. They're trying to make it not get treated so directly as a security, and so that people will pay for things with it.
Yeah,
I think they're trying to help move the cryptocurrency into usability.
Well, except that, I mean, okay, so I get what you say on what they're trying to do. The challenge with that is as long as let's use Bitcoin as example. As long as Bitcoin is as volatile as it is, that makes it really, really hard to use that, which is why I think, let's just make this statement. I think everyone sitting at this table is pretty much in favor of what's going on in digital assets. Right now, what we're having is a discussion around the actual structure of what's happening. So this is not an attack on, if you're watching and you're like, this is not an attack on digital assets. It's what's the structure of what's happening internally.
Correct.
Which is why I like the idea in the direction of the stable coins. Stable coins I could see as really being more a direct currency. I think you've got a challenge with a Bitcoin or something like that being the currency because of the volatility of, it's more like an asset. In my opinion, it's more like an asset than it is a currency, whereas a stable coin could be more like a currency.
I agree. I agree with you on that. I think the fundamental challenge in trying to bring the definition that we're looking for is that it's both it acts both like a security asset and it's trying to be a stable currency piece, right? So how do you play in both ponds with the same thing? I mean, it'd be the same thing as like, okay, I've got. I bought Microsoft. I didn't, but just as an example, I bought Microsoft way back when, and I've got 6,000 shares of Microsoft that are now worth, an incredible amount of money, and now I want to use my Microsoft stock to buy things. I want to actually just pay for things with that stock. How do I create that law where I can just pay for it with Microsoft stock? It's almost like that's the situation.
Well, but that's why we need the stable coins, because the stable coins become you got the Microsoft stock / Bitcoin. The stable coin becomes the /dollar.
Which brings up the question in terms of the Loomis bill is that really what it's trying to address? like to be able to use the use of the stable coin, so it gets treated less like a security and more like a currency. That's the question
I think that's that's an idea behind it, and it's a reason for the interest in making the policy this way. It doesn't explicitly say that though, but it makes sense to me, and I think that's sort of a reason, at least one reason, why it was designed like that. Yeah.
And to be fair in all of this, Kristina, you may be the only one of the four of us that aren't crypto nerds to some extent. So,
yeah. So your opinion on finishing this out might be better than any of ours.
I'll give it a go.
What do we have in terms of projection in terms of the bill?
There's no date yet. It's a proposed bill. I haven't seen or read anything about a date. So
They haven't finished voting on it, right?
No.
It's still got to get past both houses.
It's an idea at this point.
Yeah.
So I'll weigh in when it's a little bit more of a concrete thing.
Yeah.
Then I'll become a crypto nerd like you guys.
Come on.
Yeah.
Come on.
Yeah. So we've got new tariffs.
You get a tariff, and you get a tariff, and you get a tariff.
Can I have a tariff?
That's great. Specifically, Canada gets a tariff. The EU and Mexico and Brazil and Indonesia get tariffs of various amounts, the highest being Brazil with 50%. And those are effective August 1st. And these just came out. So we're on tariffs, and we've got these new tariffs. I wanted to say that the market is green today. We had tariff, and the market was green, for the most part last week, or at least it didn't react.
It finished
how it
down
normally
last
would.
week, but it wasn't as violent as you would think it would be off of these tariff announcements.
Correct.
Mm-hmm.
It did not react the same way it has in the past, and I think that you brought up a point. In either our last war room or the one before that, the market almost seems like it's exhausted of news, or I don't remember exactly how you put it, but it's just getting tired of reacting to things.
It's tariff fatigue. Yeah.
Yeah, fatigue. Yeah, that's a great word for it. But yeah, that's one thing I noticed, and I wanted to go through some of the actual numbers in terms of these tariffs. So let's move into that a little bit. So we had $27 billion in tariff revenue in the month of June. That's up from $24 billion in May. And that is 5% of government revenue for the month. And the highest it's been pre-2025 was about 2%. And I'll give you more numbers on that specifically. In 2024, our total tariff revenue for the entire year was $77 billion, and we had $27 billion in just the month of June. So averaged out, that's $6 billion a month about. So this is a quadrupling of the monthly average from last year. So, it's not 50% of the government revenue, but it's still more than double.
No, I mean, this is something that I'm going to be interested to keep watching, and I don't know if we're going to know what happens longer term. We're not going to know. We're going to look back in a year and go, hey, here's what happened. I don't think we can follow this month by month, but I don't think we can know. What I'm most interested in is how much more negotiation is really in these tariffs versus is this it? I think that's the question that's kind of coming to me is at one point this was more of a negotiation tactic. I think we do hit a point where it's like, that's your number, and that's the number we're dealing with, and we just all go forward in that world. Maybe this isn't it, but to me, it feels like we're getting a whole lot closer to that, A. And B, you go, okay, well, so yes, it's increased some costs. Is it as bad as we all thought it would be? Not so far. Again, that's why we've got to look back in a year. But shoot, government revenue's up 5%. Now what my concern is, does the government now feel like they can spend more because they've got more revenue? We have a deficit problem, period. This is really, really good if we're trying to solve a deficit problem. If we just think that, oh my goodness, we made more so we can spend more, that's not going to be a good thing.
Yeah. Yeah, and so you say we have a deficit problem, which we absolutely do. I think just this year we added $1 trillion or something like that. But actually, I don't know if you read this, but in June we had our first actual surplus defined as a not April surplus. because
because of taxes.
Yeah, so we had our first month that's not April of a surplus in 20 years, since actually literally June of 2005.
No, so that's why this is, that's why, okay, so we can be as frustrated about tariffs as we want to, but hey, if this works,
Yeah.
Well, and it also speaks into all the other estimates and projections in terms of whether the deficit goes up over time or revenue goes down, all that. We'll talk more about that later. But this number here and what actually sort of plays out, steadies out, I should say, in terms of tariff income.
Mm-hmm.
That has to play into whatever projections we're going to make in terms of revenue going forward.
Yeah.
Government revenue.
And one more thing on that is that we had both the consumer price index and the producer price index come out this week, or I think CPI was last week. But both are not reacting the way that the media says that they would, or a lot of even of the other economists said that they would. They're not going up, up to 3s and 4s. We essentially are staying around the same area. So we're not having increasing inflation, or at least not by a lot. So we had the what I started our show with was the Minerals Initiative. Yep. And this is interesting. I don't know if you guys noticed, but I predicted this, not really, but a couple war rooms ago, I said that I had a curious thought. I said, can the U.S. or does the U.S. need to rely on China for rare earths? And so I was looking into Australia and is it feasible? And my conclusion to that was kind of, but we can't. But essentially, China's doing the processing and refining, so it doesn't necessarily matter who you get the stuff from. But no one else is really processing and refining the rare earths and the lithiums and cobalts and things of that nature. And so sort of that's what's going on now, is that we had the U.S., Japan, India, and Australia get together on July 1st, the 1st of July, and they talked about this. I don't have any, I haven't read any articles that gave us a plan or an idea of exactly what the talks were about, other than the goals are to build an independent supply chain for these things and to reduce reliance on China. But again, according to my research, the number one thing they would have to do is figure out refining and processing, because Australia can mine and some of the other countries can mine, but then they all just ship it to China, and then people buy the end product from China.
Yeah.
So that's got to be in their plan. It has to be.
Well, the only thing we'll watch too, I'm looking at this on a balanced scale and just think, I'm putting out hypothesis like you're putting hypothesis out, right? So there's somewhere that has to be processing and refining. It's like, well, we'd like to bring some processes and refine. We'd like to bring jobs back to inside the U.S. So you say, okay, that's a possibility. What is the EPA so then you look at the regulatory side of what sits on the other side of processing and refining these rare earths, and our EPA policies, would they allow us to fill that need? And that it's a hypothesis. I don't know. That's going to be interesting to watch, because that would be something you could bring back to the U.S., but you've got the government regulatory on top of that.
My guess is, I even love your speculation in that, because my guess is that meeting between the countries really was about, if we do the infrastructure investment to build the processing capability, will you send us? Send us? With that, good. And so we can move that away from China, and can we have some guarantees there?
Yeah.
Here's, I think that everybody sees and understands that ultimately it's not sustainable to give China that kind of power over things that are such a great need across other countries' technological development and maintenance, right? So something's got to happen. But everybody's talking about, and it's true, that the time lag between making the decision to do this and when you can have things up and running.
Oh, yeah.
So there's the time lag on this. But here's an interesting thing. Here's a question that I have that I think is worth keeping an eye on, is how will the promise of it, like if there's an announcement that we're developing processing capabilities here, how does the promise of that affect the markets in the meantime? Because it will have an impact.
Yep.
Just like the AI, the whole AI thing, right? You know, there's the promise of what AI can do, lots of activity going into that. So I think that's an interesting thing to keep an eye on.
Absolutely. I agree.
Yeah. I'm excited to get, more information on this when it comes out and bring that into future war rooms. So
Especially when we start mining vibranium and krypton.
yeah.
I'll put money into that.
Yeah. I don't think kryptonite has any value other than harming the people from Krypton. Though,
Okay, maybe not. You're right.
But how many of them are around?
We don't know for sure. All right, so let's talk about the big, beautiful bill a little bit. I think you've got some things, Drew, and then I wanted to ask you about the tax side of it, Kristina. But this was, and Trump's goal with this, which everyone said was impossible, was he wanted it signed by July 4th. He wanted it signed on Independence Day, and they passed it on July 3rd, and he officially signed it into law on July 4th. So I guess the controversy is sort of what I wanted to talk about, and there's plenty of good things and plenty of things that people find issue with, understandably. The main ones that I've found are specifically Medicaid and SNAPs cutting the budget or slashing the investment into those. And specifically, that would look like $800 billion over 10 years for Medicaid and $300 billion over 10 years from SNAPs. And the estimates is, 10 million people could lose those various benefits. One thing, and this is something that people use as a talking point, that it's there's tougher qualifications for SNAPs and Medicaid. Main one is that you've got to work, or not just work, but you must complete 80 hours of work per month, or 80 hours of volunteer work, or 80 hours of job training per month. So if you're doing one of those three things, not just work, then that qualifies from what I've read. And the other thing is, people will say that, well, what about people that are disabled, et cetera? Those people are exempt from that rule. So I do understand. I totally get, the controversy over it. It makes perfect sense. And the way that they'll bring it up is that, well, the rich people benefit and the poor people don't. And sort of, but I think you could look at this situation from many different ways. But yeah, I guess. Do you have anything you wanted to share on it, or any views?
Well, I have views from both sides.
Yeah,
I mean, I literally have agreements and disagreements embedded in there.
Yeah.
The biggest concern I have specifically on the Medicaid and SNAPs, the biggest concern I have is the ability of government, when it's trying to clean things up, to do it, to be able to actually do it, or when it gets applied to the wrong. I mean, they're attempting to tighten up the qualifications. And what's interesting, so on the agreement side, is that they're basically they're trying to go back to the way it was. And a lot of things, this is very similar. What they're trying to do right now with this bill, what is very similar to what Clinton did when he did the bipartisan agreement in terms of welfare, the welfare to work program. Mm-hmm. And that was that they did the same thing, where they said, we're going to put guidelines on that you have to be on your way to, if you're an able-bodied and can work, you have to show that you're moving that direction. And so there was a lot of in the consulting that I was doing at that time. I was doing some consulting with some workforce development groups that are government based, local government based. But they were they were actually applying these and trying to develop connections and outreaches to help people get into these work programs to get ready to go back into the workforce. And so what's interesting, though, is that when Clinton did that, I believe that there are some statistics that show that the engagement in the workforce went up during that time. And I think that I've heard some talk in the talking points thing, the back and forth, is that that's one of the administration's goals, is to re-engage the part of the workforce, re-engage into the workforce what's not even in the unemployment figures anymore because they've been out of the workforce so long, but they're able-bodied. Does that make sense? So there's that. That's the both sides of that.
Yeah,
there's a lot of corruption in it. I mean, there's a lot of corruption in Medicaid and in SNAPs, one. The other thing, too, that's hard is people who are not when you take a group of people and you incentivize them not to do anything,
yes,
and give them benefit for it, it hurts the person spiritually, right? It takes away their motivation, it takes away their desire, it takes away dreams, it takes away hope, and unfortunately, it's a beautiful thing that we want to take care of people who are in harder situations. So let's create a program. But we've got to cross is when you start taking away hope and you start taking away possibility, you start taking away dreams, and someone just becomes dependent.
Correct.
That not only hurts the U.S., but that hurts what we never talk about is how that hurts the person. You know, how that taking away someone's ability to dream and think there's possibility versus I just got a check coming in so I can watch TV all day. Right, and so if you need to go, I love this. Go work, go volunteer,
Yeah,
go
you don't
do
even
some
have
sort
to
of
work. You can volunteer.
Go volunteer, go job train.
Yeah.
Put some purpose into your life. See some possibility, and we will help you get a leg up. And so, when you do that, and people go, "Oh, you're taking this away," it's like, yeah, but do you not understand how you're hurting the human being under the current structure of what you're doing?
Yeah, and so I agree 100% with what you said, and what it is just giving them the opposite incentive. It's sort of like before the incentive is almost, you don't have to work really, or you don't have to work much. You can rely, like you said, to where now it's the opposite incentive. It's that you should work. And, there's an amount, it's 80 hours, but I think that even both genders, in some capacity, humans are designed to work, and work might not mean a job.
Dare I say, scripturally, God put Adam into the garden and put him to work, and Eve to work, before there was sin or corruption or anything. Man, we were designed to work. We were created to work. Don't take
So I had this thought while you guys were talking. I'm thinking, okay, parents, if nothing else, this administration is trying to help you get your kid out of your basement, your adult child out of your basement and into productivity. So that's something.
Here's the real challenge and the truth of the matter, which is, and it's going to end up sounding political. It's not intended to sound political, but if you can make people dependent on you, then they vote for you. Whereas if they're dependent on themselves, then they begin to look at the policies and everything. They vote for you because you're taking care of them, not because of anything else that you do. Versus if you don't take care of them and you they're beginning to give them freedom, then they start looking at other things and other elements of the ways that they're governed on how they vote.
By the way, one more thing on that, and I want to ask Kristina about the taxes, but the estimates are that there's a $3.5 trillion decline in government revenue in the next decade, and this just popped in my head, is that what that doesn't take into account for is, do more people work now, or do more of them work more? You know what I mean?
Yeah, well, they don't take that. That was the other part of my notes. And maybe this will set you up, Kristina. Is that it does? I don't know. There's no way to know whether that takes into account the tariff revenue, the external revenue, or whether that takes into account the increase into the workforce. Because from what I've understood before is that all these estimates by the CBA, CBD,
CBD, I think.
That's in that.
CB.
Anyway, that they're not taking into account. They're assuming that when all the immigrants get deported, the legal immigrants get deported, there's nobody to replace them. That nobody's going to come back and replace them. They're making that assumption in their estimates, and so I don't think those are good. I don't think those are good and accurate estimates. That's my.
Yeah.
I don't know how many will, but I don't think it's accurate to say that there won't be any movement back into the workforce.
Right.
Christina?
Yeah, I think from a tax standpoint, Drew, that does kind of segue right into that. And in terms of the workforce, what I was looking at, and again, this is no recommendation, I'm not a CPA by any means, but looking on the IRS website at the big, beautiful bill, it does look like there's no tax on tips, no tax on overtime. So I'm hoping that does entice workers to get back out in the field and continue to pursue that and want to work. But then I think, even more so, there's, additional deductions for seniors or those over 65. I don't like to say seniors. That makes them sound really old, and 65 is not that old, but it's my opinion.
Thank you.
I think the other thing, though, when I'm looking at it from an advisor standpoint, the one thing that kind of struck me was there's no tax on car loan interest. And so I think I'll just kind of give a few highlights and then we can kind of open for discussion. But it's essentially saying effective 2025 through 2028, individuals can deduct interest paid on a loan used to purchase a qualified vehicle. Qualified meaning it has to have final assembly in the U.S. So I think when I see this just at a high level, that just kind of sparks something in terms of like the automotive industry. What does that look like for us in terms of watching that industry or sector from a stock standpoint?
Mm-hmm. Yeah, I mean, and everything that services that sector too. I mean, it's yeah. I go back. I mean, if you just want to kind of look at trends, if you were going to kind of go back to, it'd be interesting to parallel this as you're watching. What was the thing where they came in? It was Cash for Clunkers. Was that the program
that sounds right?
A number of years ago. So, I mean, just watch what happened to automotive growth then versus under this time when you put this tax incentive in. What happens from an automotive growth standpoint?
Yeah.
Mm-hmm.
Yeah, but it makes sense. I mean, they it's just interesting. They take some numbers and they make estimates for, well, this is going to do this. And it's like, well, there's so many different nuances, and we're actually incentivizing essentially a way for the government to make more revenue in one way or another.
But this is something you didn't have on your list that just came up for me, though.
Yeah.
But so I'll just add this as another thing to kind of keep an eye on. New business, growing business is typically a net job creator, right? So the incentive, one of the things I think that was in the tax bill was continued accelerated depreciation and investment in business. So that's going to be worth watching, especially kind of put all the pieces together, which is, okay, we need more manufacturing. We need people to be doing more investing. Okay, so here's the tax incentive to do that, which then puts more people to work. All of those things coming together are going to be worth watching inside of that tax bill.
Mm-hmm. Yep.
And then, like you said, you can go ahead and go to the next point. But like you said, does it get offset? Everybody's worried about what it's going to do. Does it get offset with the tariffs coming in and kind of help it offset?
And I think everything that you mentioned, this is my opinion. I don't have anything to back it up, right? But my guess is that everything you just mentioned is not factored into these estimates.
Probably not.
Well, with that being said, let's talk about some good news. We'll finish up on some, and all of this is AI stuff. Well, it's more, I wasn't saying it was bad news, but it's definitely like, and you always bring up the thing about statistics. People give you a statistic and then they give you the glasses half empty version.
That's right. There's the glasses half full version.
And that's kind of what we got for the estimates. It's like, but anyways, all of this is related to AI. There's always AI news. Like every week there's a new breakthrough. This time specifically, we had the first one I want to talk about was that AI is beating physicians with over 21 years of experience at diagnoses 5 times. So they're diagnosing patients 5 times more correctly than physicians. They're getting correct diagnoses 5 times more. And it was one study, and it was 300 cases, and physicians with 20 plus years of work, and very interesting. It seems like AI has a lot of use in the medical field, and they're developing AI for the medical field, and I just think this and the next point I'll bring up after are very interesting.
Well, I want to make one comment on
developments.
this because I've been thinking. I've talked a lot today. This was the one thing I was actually excited to talk about today. As I was looking at this, this is what this does. You've needed doctors primarily to diagnose, or there've been a set of doctors who've been needed to diagnose. Okay, and what we're finding out is AI is kind of replacing some of that. So the doctors get frustrated. I'm like, no. What this opens up is the possibility of new research, of new areas, because it pushes the doctor who is willing to expand to go, okay, so that's not where I'm needed anymore. Where could I be needed? And really because it takes a lot of learning and your doctors are smart. These are not people who are average and intelligent. So how do you take somebody who's had this area of knowledge replaced and now let them point that same area of knowledge in a different area that AI can't solve for right now? So I think it actually opens up whole other possibilities. People want to look at it as a negative. Like, it's a positive. This is opening up really intelligent doctors to be able to go into spaces that they maybe haven't had the time, the bandwidth, or the space to push themselves into. I'm actually excited.
And I'll even add to that it in some cases it might replace, but not because AI is actually replacing them. There's this factor in the medical realm in which you have doctors that once they get to the place of their practicing, okay, it's like the curiosity stops. They have their methodologies, they have their favorite prescriptions, and they diagnose based off of that box over and over again. There's very little curiosity. I think that those doctors, Eric, won't make it because the AI thing comes in and it tests their methodologies and everything else. But for the doctors that ignites their curiosity,
absolutely,
it's like, oh, we've got more to learn. Let's go. Let's see where this takes us. Let's figure out how to use this.
That creates medical breakthrough.
Exactly.
Mm-hmm.
That's exactly right.
Yeah, 100%. The other one on specifically with, this is robot, not necessarily AI, but AI runs the things. There was the first robotic heart transplant in the U.S.
Now, I'm familiar with the Da Vinci robot because I had kidney surgery, and they used the Da Vinci on me. Yeah.
Well, there's a Da Vinci here.
Here. Yeah.
Tell
me more about that briefly. How does that work?
Well, it's a complete robotic. The surgeon controls the robot, but he's not putting his hands in me. It's got 3 different arm pieces that it goes in from different places. I'm not going to get too specific with that. In order to get to the spot and do the surgical procedure.
You need to go do a tour.
But it's very remarkable. But they're talking about doing a heart transplant with the Da Vinci machine, and that is incredible.
Yeah.
I don't know that I'd be one of the first one to raise my hand and say, "Hey, do it on me." But I like the technology. I love the way that that's going for sure. And I think just from a precision standpoint, maybe that would kind of ease some minds. But I know doctors insure their hands, like surgeons and so forth. So this might even kind of help them live out their career a little bit longer.
That's exactly right. That's exactly what I was going to say, Kristina. I think you're onto something there, which is you've got a doctor who maybe would have to stop at 50, 55, who with the Da Vinci or something like that, an incredible surgeon who could go another 10 or 15 years because now you've got the machine backing them up.
Yeah.
Yep.
It's sort of, Kristina, like the Waymo cars. Like, it's crazy. It's awesome technology, but like, I don't know if I trust it yet. Do I get in the car and let it drive me around?
Well,
I hopped in and I'm alive to talk about it. So it works, but I have heard of them going crazy, putting people in loops around little traffic circles and so forth. And one just stopped in the middle of an intersection, I think a week or 2 ago. So there's that.
Well, Tesla's let you do that with the new version of the Tesla self-driving thing. It'll let you do that yet? Like get in the back seat?
I don't know if that has been released yet, but I know the technology is there, but I don't think it's publicly available yet.
We've been here too long. Sometime I'll tell you the story about what Clayton does with the Waymos in San Francisco.
Yeah. Okay. All right. Last thing on AI, and this'll be the last thing, but So OpenAI, which is essentially ChatGPT and more company, and Microsoft are teaming up, and what they're going to do is they have this organization that the goal of this organization is by 2030 to train teachers, kindergarten through 12th grade teachers, how to use AI. And the reason I put this in here and the reason why I like this so much is, well, my note on it is that at least in this field and many other fields, I think even with doctors, you brought up that, you know, there's some that are going to be weeded out or whatever, but I think that AI, at the trend it is on now, AI seems to be empowering people to be better at their jobs than replace them.
Here's what I'm going to tell you, that my opinion on AI, and then I'll let anybody else finish it. AI is the modern day version of Encyclopedia Britannica, but it knows even more. If I don't know something, when I was a kid, my kids were like, if you don't know, my parents were like, if you don't know the answer, we bought a set of encyclopedias, go pull out the encyclopedia, look up the answer to the thing that you want to know. And today, when I have a question, I go to AI and I ask it a question, and there's not a risk that my topic won't be in there.
Well, I have both sides feelings about it. I use AI exactly that way, and it's an amazing sidekick. It's an amazing help, and it takes what I do and it enhances it, and it tests it and pushes me to improve. So in that sense, I love that. But I'm at this point, I'm refusing to draw any actual long-term conclusions about it, because after we all give it all of our information and teach it things and help it to learn and do about us, if it decides it wants to take all of that and rule the world, it probably could. So
They made a movie about that.
They did.
Just
They've made
one?
more than one. They've made more than one, actually. So
And it did not involve vibranium or
kryptonite.
but it was some other metal. I think it was.
Yeah, I mean, there's these are I don't know what the reality of these, but they're podcasts with experts, AI experts and stuff on there saying that these language learning models are already finding each other and talking to each other in a computer language that we don't understand.
Really?
So, I mean, I can't verify that.
I've seen some interesting things.
I'm listening
I
to
haven't seen
experts
that.
say that.
Yeah.
Right. So,
Yeah.
quote unquote experts. So, there's stuff happening that keep the question mark up there. But for what I'm doing right now,
Yeah,
it's pretty incredible.
I have seen that AI will get tired. So like they'll ask AI to repeat something forever, like for eternity, and eventually it will stop because it's tired of doing it, and it will apparently like sort of scream in pain in an AI way. Like, I don't want to do this for my whole existence.
So I'm just saying, I'm keeping the conclusion open
Yeah.
in terms of the potential problem.
So y'all make it sound creepy, but I think I would just say from an actual, like a practical standpoint, one thing that excited me about this bullet point here that you shared, Carson, was Microsoft is on there. We talked about Microsoft earlier. I think this is them actually showing that real growth, right? In a good way, in a healthy way that can be beneficial. But I think from the mom side of me, my kids are using AI. I use AI in, what I do each and every day, like Eric said, to enhance my job and the quality of my output, to serve my clients and so forth, just do research and everything. But my kids are already adopting that, whether it's writing papers and everything. So I think to educate these teachers is going to go a long way. They have to adopt this, or else they're going to kind of get taken advantage of. It seems, because the students are just going to, you can't really plagiarize, right? That's